Hey guys, Joseph James here once again with your nightly newsletter brought to you by theschoolofttrade.com. Today was September 14th, 2009. Now, of course, today was a Monday that we've been waiting for about 60 days now. This is the first week now back after the summer session and the transitional week last week. Now we're looking to get back into business. And of course, guys, before we show you the great success we had today getting back to business in our trade room, I want to remind you guys we have a free resource online. Check out our YouTube page /School of Trade. And when you're there, guys, please subscribe to our page there on YouTube and please rate and comment on this video. Now, once again, like I said, guys, had a great morning here in the market. Went 3 for 3, $400 in our pocket. All it took was a $4,000 account, guys, to trade this with us today. 4 contracts. We did 3 trades on crude, so $1,000 margin per contract. Trading 4 contracts, that would have cost you $4,000. So we made about 10% return on equity this morning on our trade account. Our weekly total, of course, being a Monday, is $400, and it brings our monthly total to $1,210 as we make our way through this month of September. Now, we should see our results here dramatically improve here as the volume continues to return back. Today was a great day in the market. We really saw a lot more volume than we did last week and the week before, obviously. So we're expecting this thing to continue to get better. Let's talk about our term of the day. It's scalping. Now, of course, everyone knows what scalping is, right? Well, maybe you've heard of it, maybe you haven't, but this is a technique of buying or selling of a security and then immediately buying or selling it back to the market for a quick profit. This is also known as high volume trading. Now, high volume trading meaning that most scalpers will use a lot of contracts, right? They'll, of course, trade larger size a lot more times every day. They'll get in and out of the market quickly, multiple times during the trading day, obviously only looking to scalp a couple ticks here or there. Now, they may take anywhere from 5, 10, 20, even 100 trades every day for some of our more aggressive scalpers. And, of course, there are some great benefits of being a scalper. There are also some downsides, but the benefits, of course, requires intense focus. Now, what I think is the best thing about scalping is that because you're taking so many trades all day long, it's going to require you to be engaged in the market. It requires intense focus. Now, as you guys know, when we start getting bored, when we start looking at our instant messengers or our emails, or we start playing with people, in the room that you're trading in, well, you lose your focus. You drop out of the game, right? You lose your engagement with price. And of course, you're going to be less likely to force trades when you're focused in the market. You'll be less likely to create trades or impulse trades when you're engaged and when you have that extreme focus. Now, another pro, of course, is that there's less overall market exposure per trade. Now, of course, remember, though, you're going to be trading a lot more often. And that risk exposure, even though it's less per trade, be careful, though, because you, of course, can be over trading in this situation and get chopped up pretty good. So one benefit, obviously, is each trade has less overall exposure. It's, of course, can be a lot easier to obtain lots of small moves than one large move. So a 10-point move in the S&P can be pretty tough to see. But we can definitely see 10 one-point moves in the S&P. And, of course, that's exactly what we're going for here. It's easier to obtain lots of smaller moves throughout the day than to be able to get on the big move. Flexibility to trade any market in any time frame, because you're going in, again, trading more often, but looking to get quick profit in and out of the market according to your systematic rules. Now, theoretically, there are 3 different types of scalpers. There are systematic scalpers that scalp with the use of an automated system, right? We call these, whether it be high-frequency trading, or whether it be algorithmic trading systems, black boxes, gray boxes, right? This is the systematic scalping technique that, again, uses automated systems to do so. There's a discretionary technique. This is where a trader makes decisions in real time, right? You and I will use our mechanical rules. We will make split-second decisions based upon what our rules tell us. And this, of course, is called discretionary trading, right? We trade at our own discretion. Then, of course, spread scalping, where we're basically scalping the spread or the difference in the bid and the ask. All right, now what do you need to be a scalper? As you can imagine, right, we need some specific tools to be a scalper. If you're going to be a firefighter, you need to have specific tools. If you're going to be a dentist, you'll need to have specific tools. Well, of course, if you want to be a scalper, what are you going to need? Well, of course, everything starts with our advanced lifetime membership here at the School of Trade. Contact our sales team for more information about this advanced lifetime membership, but that's going to give you the lifetime access to the trade room, all the indicators, the charts, the data, instruction. Guys, it's a very good package, and of course, it all starts with the advanced membership. Also want to make sure you have a well-funded account. A well-funded account needs to be used because you've got to be able to cover the commissions and, of course, all the excessive trades you're going to be taking all day long as a scalper. So you need to make sure you have a well-funded account. High-quality execution software, another definite must-have. You've got to have a system that will be able to execute trades in the shortest amount of time possible. A lightning fast internet connection. Make sure you guys have the fastest internet connection you can possibly find, because if you're going to be a scalper, every second counts. Also want to show the lowest round turn commissions you can find. High liquidity, obviously, in a market is going to be very important, because if you don't have liquidity in that market, scalping is impossible. And of course, you got to have confidence in your entries. That confidence is going to come from using mechanical rules, and those mechanical rules we're going to give you every day in our live trade room as part of our advanced membership. So we've got you covered here to be a scalper when it comes to our methodology here at the School of Trade. Now come out tomorrow morning and join us in our live trade room. It opens up at 2:45 a.m. We'll show you guys how we can scalp, whether it be crude oil or gold or the S&P. And of course, the beginner's course, definitely want to remind you guys, the beginner's course is a very important piece of this pie. Grab a copy of that beginner's course if you're coming out to join us for the first time this week. And of course, we'll show you guys tomorrow morning in our live trade room how we exercise our 3 jobs: identify, adjust, and execute. Of course, all done in real time. Let's take a look at some of the trades we took today. Now, as you guys can see here, this is the Crude Oil Futures, symbol CL. 10:09 is the front month right now. Our first trade of the day was taken at 9:54, just before 10 o'clock. So as you can see, we didn't see anything in the pre-market this morning. 9:54 this morning. This, of course, was a breaker pattern short, a brand new setup called our breaker pattern. This was a breaker pattern short. 69.04 was our entry here. We got 60 bucks on this one, 6 ticks. We took our first target at 3, took 2 contracts off at 3, and we moved our stop down to entry and got stopped out at our point of entry at 69.04 for a total of 60 bucks, right? 6 ticks here on that first trade. Now, it wasn't long thereafter. We kept the winning trades going here, right here at 10:10. Again, on the crude, this was a 2-step long here. 68.77 was our entry here to the upside. We took targets at 3 ticks and 6 ticks for this 2-step, right? A counter trend trade pattern. We took 2 off at 3, 1 off at 6. That totals 12 ticks. And of course, that gives us 120 bucks here. Now you'll notice on this particular example of this trade, there's a blue line there in front. Right, that blue line, of course, marks our swing high level. And as you guys know, when it comes to a 2-step, we're looking to go against the short-term trend, which of course is pretty clearly down here. Going against the short-term trend, we're waiting to get above that blue line, right? Get above that swing high, which confirms the buyers now have control of the market. We wait for some follow-through, and we take that trade to the long side when we see the buyers confirm. Let's keep moving. We weren't done yet. We had one more trade to take here, guys, just before 11 o'clock. 10:50 here, 50 minutes past the hour of 10 o'clock. On the crude again, 2-step short here at 69.20. Now this is another great example of a 2-step short. Counter trend trade, and as you can see here before I zoom in, we had a strong trend up. We saw a stutter step pattern followed by, of course, what appears to be somewhat of a double top there. Not really, but you guys can see what I mean. Then, of course, we had our swing low at about, what was it here, about 69.23, 24, right? Just below that 69.25 level, which you can see here marked in these thick red lines right now. And then, of course, we grabbed our entry here at 69.20. Now, the key here was we had to get into this thing right when it broke below that red line there. That red line was also our swing low, as you can see referenced there to the left with that green arrow up. So we marked our swing low, took the break of that swing low on our 2-step short. Right? Very easy pattern to understand, even easier to see it happen live in real time. And of course, you can see there, right to the right there, we've got a wave short was a re-entry. That was a qualifiable wave short. Right, guys, add it all up, guys. 220 bucks on this one. Took profit at 3 ticks, 6 ticks, and then trailed our stop for 10 more ticks. That put 22 ticks, or $220 US on a 4-contract account in our pocket. Add them all up, guys. There's your 40 ticks there on the crude this morning. I also wanted to show you guys an example here of how we use our pace of the tape indicator one more time. Now, this, of course, was on the euro this morning. Great example here how looking for a 2-step long. I'm sorry, excuse me, this is wrong. This was a breaker long, okay, looking for a breaker long above that 46.09, right, 46.10 level, that breaker long. We chose to avoid it because we saw some specific patterns in our pace of the tape indicator. Now, all the way to the lower right-hand corner of your screen, as you can see, guys, that pace of the tape indicator, again, we look for patterns. What is the pace of the tape? It's a speedometer of our time and sales window, and it gives us patterns to look for. When we see these patterns develop, that gives us clues as far as what the direction of price is moving, who has control over price, and of course right here, it kept us out of this losing trade. It's not enough for us just to know when to get into a trade, but we got to know when to skip them. Right? We have to know when to avoid our trades. And as always, guys, come out and join us tomorrow morning in our live trade room, and we'll always go through this stuff live in real time with you. We open up at 2:45 a.m. tomorrow morning on Tuesday. We've got a free webinar tomorrow morning at 11:30 a.m. Eastern Standard Time, so make sure you come out and join us for that free webinar. It's in our trade room. And of course, the beginner's course recommended for all free trial members. My name is Joseph James. Please send us an information. If you want more information about lifetime membership, drop us an email, sales@schooloftrade.com. We'll see you guys next time.